Hey everyone, welcome in to another daily editorial here on the KE Report. We're talking rotation and it seems like rotation into the small cap sector as I am chatting with Dana Lyons, fund manager and editor of the Lion Share Pro website, which I will link to in the show notes. Dana, the last time we talked about 2 weeks ago, you were highlighting the small caps. We're very close to a breakout. The S&P and NASDAQ had just hit some all-time highs. And then the question of, is there a rotation trade coming in? Seems like there has been because the small caps, you look at something like the IWM, that is up about 9% this month. And the NASDAQ, that's down about 5% just over the last 2 weeks, really since we last chatted. Dana, rotation, is it here to stay? Is this a sustainable rally in the small caps?
Yeah, I truly believe it can be if you are looking to add further allocation into the equity market. That's where I would be going. Some of these broad measures, it doesn't necessarily have to be just the small caps, but any measure, broader measure of index or ETF position fund, whatever. That's where the opportunity is right now because we saw for pretty much most of the second quarter was the only game in town was the mega caps and large cap tech. And we saw that run its course. And I think around the last time we spoke a couple of weeks ago, we commented how the mega caps and the large cap indices, including the S&P 500, NASDAQ 100, and even the semiconductor ETF SMH were all tagging some major Fibonacci extension levels. So, technically speaking, it was a perfect time for those areas to cool off. And at the same time, the broader market and the small caps, mid caps have spent the last quarter, last 3 or 4 months, pretty much running in place and kind of digesting the first quarter gains. And just when the large cap stocks started pulling back, we saw a breakout in the broad market and trying to hold those breakout levels now in the broad market. And if they do, I don't see any reason why they can't, go on a nice, pretty durable rally from here.
Dana, what are we seeing in terms of breadth then? It was the argument that the market had no breadth because it was just a select few tech stocks leading it higher. Now we're seeing a wider range of stocks moving higher, or a wider range of sectors moving higher. What's some of the breadth updates that you have for us?
Yeah, the breadth has obviously been a lot better. We had some major red flags in the second quarter when again, the large caps were hitting new highs seemingly every day, but it was coming on worse and worse breath. We saw the divergence in the NYC advanced decline line, which did not hit a new high, even with the S&P hitting new highs. So we saw that lagging the non-confirmation throughout the second quarter. That's been a different story here in July with the breakout in the bond market, like I mentioned, pretty much before the last 5 days or so, we saw that big breakout. We saw new highs in the AD line and many of the broad averages. So along with that, we saw obviously breadth has been a lot better, even on a day like today. The Nasdaq's down some 500 points, Dow's down 400 or so, and yet breadth is just barely negative. Some of the small cap indices I'm looking at, the pure value small cap index that we talk about, that's a good sign of risk on versus risk off. That's actually up on the day right now, which is a very good sign. So doesn't mean there can't be more weakness in those mega caps in the S&P 500. It does mean if you're looking to stay invested or add out further allocation, that broad market, those broad areas wouldn't be a bad spot to add that allocation to here as long as they hold those breakout levels again.
So, Dana, do you view this as a healthier market now that we are seeing this rotation, or is this concerning that money is rotating into small caps because in the past we have seen small cap rallies sometimes signify the end of bull market runs for markets?
Yeah, that has been the case at times, but typically you see, especially at major tops, you always see some sort of a deterioration in the internals and the breadth and the foundation of the market prior to the ultimate top. And we're not really seeing that yet. We're just seeing the beginning of kind of maybe that last hurrah when the breadth and internals and the smaller caps, broader stuff is just now breaking out. So maybe starting a one last push higher, but I don't see any the red flags, the concerns we had about related to breadth in the second quarter. We don't really have those concerns now. So when you ask, is it a healthier market or not versus what we saw in the second quarter? I guess it depends what you consider the quote unquote the market. If you consider it the S&P 500, I would say it's not necessarily a healthy market, especially after getting so extended, hitting those key fib extension levels and pulling back. That's where the risk is right now. I would consider the quote unquote market to be the market of all stocks. If you're considering that, then I think it is a healthy market. To us, the more stocks that are going up, the healthier it is. So it doesn't mean like in the second quarter when you didn't have that many stocks going up that you can't be invested in something like the S&P or NASDAQ 100, which is going up, but that typically is less sustainable move. And maybe that's another reason why we're seeing the large caps pull back. But right now, I would say this is certainly from a breadth standpoint and an internal standpoint, I would say the quote unquote market is on much more solid footing, at least in the intermediate term. Now, there are some signs of some late cycle type of behavior, but we're not jumping ship just yet, not with those broad averages breaking out and opening up further upside.
So, Dana, make sense of this market then. We're seeing small caps breaking out, running higher. That usually says, at least to me, more risk on, more aggressive trading. But then we're also seeing defensive names do better. That kind of flies in the face of the small caps. But I guess in general, can we take a step back and just say it's the lagging sectors that are now starting to play some catch up?
Yeah, there's something to that for sure. We like to talk about the rotation, and I think we're seeing as money pulls out of those former relative strength leaders, they are finding a home in some of those previous laggards, whether it's the broader averages, small mid cap averages, equal weight stuff, or some of those defensive names that had lagged for a while and that are now performing much better. The healthcare consumer staples, utilities, REITs, those types of sectors that are actually performing well, starting to perk up and breaking out like the those broad averages. So that typically is also late cycle type of behavior. This late cycle behavior can be very profitable. It can last for a while, and you can take advantage of that before quote unquote late cycle becomes quote unquote end of the cycle. So right now we've got significant allocation to those areas of the market, and we will ride those as long as the indications and the market data continues to be positive. So I don't see any reason why that can't continue for a bit. But again, it combined with some of those what we call background indicators, valuation metrics, percentage of household investment metrics, that type of stuff is all wildly extreme and frothy to the upside. That's not a trigger, that's just a background condition. So when some of these positive recent developments that we're seeing, once those start to run its course, then we can be a lot more concerned, but we're not just yet.
Okay. Hey, I appreciate those insights there, Dana. I'll be following up with you every couple of weeks just to check on some of these background internals, see if anything changes. Let's move over, get a quick comment on the gold sector then. I know you trade GLD, which just last week made a run to an all-time high and then pretty quickly reversed, still hanging up around those higher levels, but it was an interesting reversal last week. How are you seeing the setup in something like GLD?
Yes, still positive on GLD as well as SLV, gold and silver. I still like them. The prospects going forward in the intermediate term, they've had a nice run. Nothing goes in a straight line, so you have to take that into perspective. But it's still generally positive there, still generally positive on the miners as well. One area that has seen some selling pressure and really start to lag versus the other parts of that precious metal would be, if you call it a precious metal, would be copper. And even looking at the copper miners, which on a nearer term basis are now have hit higher, I should say, lower highs and now lower lows, which is certainly an area of concern. So we'd be less focused on that area in terms of an allocation, a longer term allocation. With that being said, there may be a trading opportunity right now in copper miners and copper, which are hitting some, um, like I mentioned, lower lows, but also hitting maybe some trading support. So we have had added some exposure back into copper and copper miners. It again, it might be just a trading move. We'll see, but on a longer term basis, still much more confident, I guess, in the gold and silver area of the market.
Okay, well, let's dive into copper, especially COPEX, because as you said, it has broken some, at least an initial support here, and it's done it on very high volume. So, what level would you be looking at for COPEX as a potential bounce, or maybe a more concerning bear market action or further downside?
Actually, just bought some Copex. I think it was yesterday or this morning, down here in the low 42 range. Um, might get a bounce off of that level. Doesn't always work out, but we did add some right in this area here. So I'd love to see a bounce. If we can get back up to like 46 and a half, we'd be happy with that trade. On a longer term basis, we'd rather see it start hitting higher highs, higher lows again, but that'll take a bit. I wouldn't be necessarily concerned about the end of the whatever bull market it's in, unless we broke down seriously like below the 36 level, maybe on Copex. That might be the level we're headed to before the ultimate low here in this cycle. But I guess what I'm saying is right now, within this kind of pullback we've seen over the last couple months, is more of a trading vehicle for us right now until we can start establishing some higher lows and higher highs again.
What does this higher volume tell you about maybe the interest in the sector? Because volume really started to skyrocket in March when copper started to take off and COPEX started to finally move higher.
Yeah, and interestingly enough, you typically see, well, you almost always see a higher volume on the way down than you saw on the way up because it's more of an emotional trade. It's interesting that we saw such high volume on the way up at the beginning of a move, which is very unusual to me. I would lean towards that being a very bullish or constructive scenario. Generally, on the way up, you see the most volume at a top after a long, drawn out rally, and you get the last Johnny come latelys pouring in right at the top. And typically, you get high volume there, but that's a topping signal. This one, in this case, in case of Copex, it was like right at the beginning of the move, like you mentioned in March, which was impressive to see. We'll see if that ends up being the case with this pullback right now. Seeing some more heavy volume in it, but again, to us, we're going to lean on that being more of a bullish or constructive sign until this whole thing falls apart, which I don't expect it to. Still generally bullish again on precious metals and commodities in general, but certainly over the last couple months in a in pullback mood or mode, or at least consolidation mode here.
Okay, Dana, I guess broadly, taking a step back, are there any sectors that have lagged that are starting to get some momentum to the upside where you see good potential to carry on with some of this upward movement, this rotation trade?
Again, I'd focus on those areas that we've talked about, small to mid caps. There are some individual, like small mid cap dividend funds that we like. The RZV, the pure value, small cap pure value that I mentioned is a real good barometer of risk on versus risk off. Has consolidated for the entire year for the last 6 months. It's just pressing up against all-time highs. If we see a breakout there, that could really boost at least a short-term risk on pop higher. So yeah, I would stick with some of those broader averages that have just broken out and trying to hold those breakout levels, as well as some of those defensive areas, healthcare and utilities, staples, some of those more recently broken out names. Financials, I would throw some of the financial areas I would throw in there too. Insurance, as we've been talking about that for seems like a year, it continues to run higher, but some like broker dealers just recently broke out to all-time highs, and um, certainly I would say would argue for plenty more upside. And then maybe a contrarian play looking within the tech space that is really getting taken apart. There are a couple areas, cybersecurity and software, that really look a little bit different than the rest of tech. Never went to new highs above that 2022 peak, formed potential cup and handle over that time, and consolidating the most recent test of those highs, that third test of those highs. So if those two areas can hold here and then pop to all-time highs, you could have significant upside potential there, even as a lot of the rest of the tech is pulling back and uh, signifying some risk after being so extended.
Okay. Sounds like there's a lot of opportunity out there right now. The markets were in a way kind of easy where you could just play the big large cap tech and magnificent seven stocks higher. Now the rotation is bringing back in a lot of other areas, a lot of different other stocks, which who knows how long that's all going to take to run, but it does seem very early stage as it's really just about 2 months or 2 weeks, sorry, into this rebound. Dana, always great chatting with you. Thanks for sharing some of your insights with our audience. I recommend everyone listening click that link in the show notes to visit the Lions Share Pro website. Follow along with Dana and some of his other trading strategies. Dana, thanks again for taking time with us today.
Appreciate it.